Hi, I'm Jay Freeborn, licensed tax professional at Washington Tax Service, watax.com. I am also the author of TaxResolutionTalk.com and update blog posts there weekly. And our company is doing this video to explain the changes in the IRS offer and compromise rule changes. Biggest changes ever. In some instances, people are reducing what they're required to pay the IRS by 75%. It is amazing. We're excited. People that didn't qualify for the offer and compromise are now qualifying. It's a dramatic, dramatic change, and I'm here to talk to you about what it might mean for you. So, the most traditional way of settling your debt with the IRS is to do what we call a cash offer and compromise. You send in your offer and compromise, and in 6 months you're required to pay a smaller amount than what you owe, and the debt is written off and removed from your record. In example 1, you're required to pay 48 months of disposable income. This is what you were previously required to pay. In this example, if you had $300 in disposable income, you're required to multiply it by 48. And in this example, you'd have to give the IRS $14,400 to settle whatever debt you have with them, and they consider it done. Now, of course, there's a lot of formulas that come into disposable income. We can get into that later. But generally speaking, if you have $300 disposable income multiplied by 48 months, you previously were required to send in $14,400 to settle your debt. Now, 12 months. 12 months in this example times 300 is $3,600. So in essence, you're $3,600, you settle whatever your debt is with the IRS, and you're done. I'm going to give you some more examples. Example number 1. Let's say you owe the IRS 50 grand. Okay? And you have the ability to pay $700 a month, factoring in IRS allowable expenses. You have no substantial assets. Your household goods are considered exempt for the most part. In fact, the household good exemptions has been increased also with this law change. 700 times 12 months is $8,400. So your $50,000 debt, in theory, with all these caveats, could be settled for $8,400. This is a massive change that you previously could not have taken advantage with a 48-month rule. So it's a 12-month rule now, folks. So if you're paying the IRS $700 in a payment plan, get on the phone with us now. I'll be giving you your phone number in a few minutes. Now, in the next kind of rule change is with the 24-month payment offer. This is as distinct from the cash offer. In the previous law, you gave 60 months of disposable income plus your assets, and then squeeze that into 24 monthly payments. The new rule has changed. 60 months no longer, 24 months is the rule. 24 months plus your assets squeezed into 24 monthly payments. So in theory, if you have no assets but the ability to pay $700 a month, you're going to be paying that $700 a month for 24 months to settle whatever your debt is. Other big changes with the IRS offer and compromise rules, a big one is the IRS is factoring in what you pay in state payments on your back tax state payments. They did not allow it for about 10 years, maybe 9 or 8. They used to way back when. They are allowing what you pay the state. The exact formula for doing it is not exact yet, but it is a big new consideration of the law. Another law change is if you had sold an asset in the previous law, in the past 5 years, you might be required to give the amount in your offer. That has been squeezed down to 3 years, which will make a difference. There's another change with the credit card law. They are now allowing the minimum credit card payments that you make in the national standard. More on this later. Now, where are they not changing the offer? Well, if you have no disposable income, the rules are the same. The IRS is pretty much going to take a low deal for you, a nominal fee like $500,000. Of course, assets are in the equation. And of course, if you're somebody that has the ability to pay the IRS by liquidating an asset, the rules don't change for you. You're still required to pay them. If you contact Washington Tax Service, we'll explore getting the penalties off. Now, of course, one exemption to the people who have assets, if you own a home and you can't borrow against that home, we have been seeing cases here at Washington Tax Service where if you can show that you can't get a loan, that the IRS will not consider the house as part of your settlement amount. So in any case, big changes, folks. If you are making payments to the IRS, any kind of payment, and your debt is over $20,000, please give us a call at 1-888-282-4697. I'm Jay Freeborn. I will be updating the rule changes on the IRS, offer and compromise at my blog, taxresolutiontalk.com. Anyway, I hope this commercial has informed you better about the offer program. Thanks a lot.